What's going on, everyone? I hope you're having a good day, and this is today's journal. Today is April 2nd, Tuesday, and today we started off bad. I think I took 4 trades total, and I lost my very first one when the market was most volatile, so my stop loss was the biggest, and but then I won my next 4. So I made back all of my money and a little bit extra on top, but I only profited about $60 on the day. So I'm not gonna call that as a big profit or a big loss. It's kind of like break even, but I'm just glad I got out of that loss. And this is my account balance right now. As you could see, if you compare it to yesterday, we are higher a little bit by $60-ish. But now let's get into the trades that I took and what I could have done better on the loss that I took. So the first thing I did was determine my daily buys. So we had been dumping a lot. This is the 4-hour candle right here. We had not been respecting this fair value gap right here. We didn't respect this liquidity sweep right here that happened before market opened and before this candle closed. And we kind of just broke structures to the downside. We had already been in a downtrend on the 4-hour right here. As you can see, we were in a downtrend because of that break of structure. But we had been just dumping like crazy, so I was very, very bearish. On the 1-hour, you could also see we had just been straight going down without any breaks whatsoever. So now let's get into my trades and why I took them. So the first trade was a long, and that was because I realized we had been dumping for a long time. It had been just going straight down, and now I was expecting a reversal to happen because I didn't think we would keep going down anymore. So what I saw was that there was SMT divergence on the 5-minute right here from this low to this low right here. And then I saw that we disrespected this fair value gap right here. This bearish fair value gap got disrespected by this candle right here. But as you can see, this inverse did not get respected, so I did not end up taking this trade at all. But then what I saw added more to my confidence that there was a sweep of this liquidity right here. Alright, I marked out the liquidity that just got swept after SMT divergence. So my thinking was that the market had just stopped out all the traders that were tricked into buying because of the SMT divergence. And now we're going to go up. I was right, but my timing was a little bit off. What I entered off of was this inverse fair value gap right here. That's a bearish fair value gap that got disrespected. And then we got re-entry into it, so I went down to the 1 minute. This is what the re-entry looks like onto the 1 minute. And on the 1 minute, there was a bullish fair value gap right here that got respected, not disrespected, sorry. We entered into it. We were respecting it here a little bit, but I didn't enter because I wanted to see a candle closure above the fair value gap, so above this line right here. And I got that closure right here on this bullish candle right here, so I entered longs right there with my stop loss being this low right here. And my take profit, I was targeting the start of this fair value gap right here for a 1-to-1 risk to reward ratio. But as you can see, I did get stopped out, unfortunately, and I lost about 400 something, I think, I'm pretty sure. But as you can see here, price wicked me out, went a little bit down, and then just went right up in my direction. So I was right, but my only mistake here that I could spot is that I didn't wait for a 5-minute break of structure to the upside before I entered, which I could have done, and it would have obviously not led me to taking this loss because we had been in a 5-minute downtrend right here. But these types of trades where you get wicked out like that and then the price goes right in your direction, you can't do anything about that. And that's the type of losses you need to learn how to take and handle pretty well, because you did your part well, but the market just didn't deliver how you wanted it to. And that happens a lot of times, even to the best traders, so you can't let that mess up your psychology. Anyways, that was the first trade. Now let's get into the second trade. For my second trade, I caught a quick little scalp up after I realized that we were in a 5-minute uptrend right here because we broke structures to the upside. After taking out this liquidity right here, we went up and broke straight to the upside on the 5-minute. So then what I did was go on the 1 minute. On the 1 minute, I saw this fair value gap get left behind, and I also saw that we were moving up with good momentum right here. So I waited for a tap into it, and we got a touch into the fair value gap, barely, but that still counted as a touch. And then I saw a good reaction up off of the fair value gap, so I ended up taking longs on the closure of this candle with my stop very tight to that low. And my TP was the start of this fair value gap right here, which got hit right away almost, and we got hit for a quick little 0.5 RR, and I made some of the money back that I had lost on the first trade. Then for the third trade, I had noticed that we were still in a pretty strong uptrend, and I also noticed this fair value gap right here. Sorry, I don't know why it just bugged out, it's lagging on me, but that's a fair value gap right there. So I went down to the 1 minute. So after this bounce into the fair value gap and a reaction up, I was pretty sure we were gonna go up a little bit more. So I made my entry right there, and my stop loss was the end of this fair value gap right here. Because if it went down to that, then I didn't really want to risk losing any more money. And my TP was this high right here that I have marked out. And we hit for a 1-to-1 almost, and it was a nice little scalp that I took, and I made back some more of my money. Then for my last trade, I realized that we had broken structure to the downside, so I was only looking to take shorts unless the trend switched back up. And I had also noticed on the hourly, we had entered this fair value gap right here. This is the wick that you see on the 5-minute break of structure. It's kind of hard to see, I know, but it's like right there. All the stuff is there, but that's the big wick going down. So now I realized that this bullish fair value gap that we had used for our longs initially got disrespected, and now we could use it for our shorts as an inverse fair value gap. So after I saw this disrespect and a re-entry into this fair value gap, I went down to the 1 minute. This blue candle was the re-entry right here into the fair value gap, and then we had disrespect right here to it. So I entered shorts right here on the closed of the candle, and my stop loss was this low right here, and my TP was this low right there. And as you can see, price delivered beautifully, and I made more of my money back on that trade too. And those 3 trades were my winners, and the first one was a loser, which was right here. And that, I couldn't really do anything about that loss. It was an unfortunate loss, but at this point in my trading career, I've gotten used to taking those types of losses where I can't really do anything about it other than like some small little tweaks, which I could have done was wait for a 5-minute break of structure to the upside and then traded, and I would have won all my other trades and I would not have lost, which is what I'll keep in mind next time I trade. But I hope you learned something new from this, and yeah, see ya. Peace.